Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
When you're looking at the U.S. dollar CAD, for instance, your symbol is going to be CDD. And when you're looking at the FX options, one thing you need to keep in mind is that the U.S. dollar always comes first. So when you're looking at currency pairs, a lot of times you'll see these flipped around and you'll see the U.S. dollar second. So if you're using FX charts for your analysis, sometimes you're going to have to flip them over and kind of think of them in reverse. And I'll show you an example of this here a little bit later with the U.S. dollar compared to the Japanese yen. The chart that we're looking at here, again, is the U.S. dollar compared to the Canadian dollar, the USD CAD pair. And back in July of this year, we were looking at a comparison between this and what had happened previously in the USD JPY pair. As you can see, earlier in the year, there was a nice reversal on the Japanese yen compared to the dollar off of the lows where it had formed this congestion range. And we were comparing that to what was happening in the USD CAD. We had the exact same type of price action. So I had projected that we would expect an upside breakout coming out of that pair heading into the end of summer and then into this fall as well. In the previous presentations, we had looked at different types of support and resistance levels that were based on price resistance levels. So we were looking at things like previous levels of congestion and that type of thing. Well, Fibonacci is just another type of support or resistance. And if you use this in combination with things such as price support and resistance, you're going to have better accuracy in your target projections. For instance, here is our chart of the USD CAD pair, and you can see that it had this nice solid trading range at highs. This is the chart that I used in my July presentation where we were starting to look for a pattern on the smaller time frames to pick up a breakout on this security here, on this currency pair. Now, heading into the very end of July and almost into the start of August is when we finally saw this trigger take place where the currency pair had been trading at this upper level base, and then it had a two-wave pullback into the middle of the congestion. Let me grab a pointer here. So you can see an initial pullback and then a secondary pullback right into the middle of this congestion zone. So this provides a shift in the momentum or a shift in the pace, because if you compare that to the previous upside move within this congestion, you can see that the activity was much stronger on the upside. This means that as it tries to push higher once again, because it has only retraced about 50% of that previous correction off of the highs of the congestion, it's going to have an easier time breaking through the upper levels of this entire congestion itself without really pausing at all. And you can see that it tested the upper trend channel at about 1.02 or so and barely stalled at all before it broke through that. In the previous presentations, we had talked about these two-wave pullbacks and how the momentum shifts and how you can utilize that for timing your entries. So the actual entry on this position was a break of the trend channel here, right here, on that two-wave pullback. Now, there are archives of these previous recordings if you'd like to go and take a look at them on www.ise.com, and I'll post these links again here a little bit later, too, so that you can check them out as well. Originally, a target level that we looked at on the U.S. dollar CAD pair was based upon an equal move zone coming off of this low on the breakout higher, which placed it up in here. And, okay, I thought I had one more chart, but I guess I don't. But that hit heading into the very end of the summer, going into the start of the fall there in August. But the next thing that you could have used, not only just the congestion levels to mark the target levels, meaning we're looking at the different previous highs, levels of congestion for resistance of where it was going to stall, but you can also apply the Fibonacci levels to this chart to help give you accurate projections of where it has a greater possibility of stalling. When you're looking to apply Fibonacci to your charts, you need a starting point and an ending point. Usually what I like to do is kind of step back to a larger time frame. Like for instance, in this case, I stepped back to a weekly time frame. And you look at the previous trend moves in the currency pair that you are trading. So for instance, in this we had a previous high back here, right about the same price that it's trading now actually. And then we have a previous low that was made at the very end of 2007. So in most of the charting platforms, what you do is you will hold and you will click with your left click on your mouse up here, hold and drag your tool down to the low and then let go. And this will project those Fibonacci levels onto your chart. Here are the projections that it made when I applied it to the USD CAD pair. You can see down here was our entry trigger from back in July. And this was our original resistance zone that we were looking at. It was based on this earlier congestion as well as the equal move coming off of the first low. And what I want you to see is that by projecting the Fibonacci levels, you can also see the levels that it held as upside resistance. So obviously a previous high is a support, is a resistance level, or it's a support level if you're on your way back down. For instance, we are coming back down into it right now. So this previous high is now support. But on the way up, it served as resistance. And this was just one core type of price resistance. You obviously don't need Fibonacci to know what that is. But can you project price levels higher as resistance zones if you don't have any trading that is any higher? For instance, if this was an all-time high here at C, how would you know where the resistance levels are going to be other than things such as if you are trading individual securities, you might have things such as the whole number resistance levels. Or as I spoke about in my previous classes, you might have the equal move resistance levels where if you had an initial rally, for instance, and some sort of congestion, you can look at that first rally, project that higher to a new target zone that might still be at an all-time high. But another tool you can use to also assist with these projections are these Fibonacci levels. The ones that you will see come up, for instance, are, for those of you that might want to use the 161.8 retracement. Again, these retracements are based upon that previous decline that we saw where we drew our Fibonacci levels.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.